Where does the Clarity Act stand right now in the Senate? When would you expect this to come back up for a markup?
We've had a good, constructive conversation at the White House on this past Monday. It's great news. Both sides of the issue were at the White House together, and that's actually really good news. I think we'll get this done. There's no question about that. But this impasse, they have to settle it between the banks, frankly, and the crypto industry. They have to settle an issue of rewards, interest, and yield. And the way you settle that, in my opinion, is to allow for crypto firms, especially on stablecoins, to be able to pay yield or rewards. And in addition to that, we have to make sure that those firms are not doing so in a way that suggests it's a savings account. We can thread that needle. It has to be done.
All right, welcome back. And that was Senate Banking Committee Chairman Tim Scott with me here yesterday with an update on the Clarity Act. It comes as White House officials met with crypto industry executives and banking associations this week in an effort to break the Senate stalemate, which has been holding up the legislation. The major impasse centers around whether crypto exchanges and companies should be allowed to offer customers rewards on stablecoins held on their platforms. The banks say, well, that's a real tool for the crypto companies to have to get consumers to move their money out of deposit accounts and onto crypto platforms. Joining me now is Wyoming Senator Cynthia Lummis. She is the chairwoman of the subcommittee on digital assets. Senator, it's wonderful to have you this morning. Thanks very much for being here. First things first, can you give us an update on when you expect this legislation to happen? You lost a big window, right, after Brian Armstrong from Coinbase complained about the markup.
Well, good morning, Maria. We did lose that window, but Senator Thune, the majority leader, has assured us that even though now we're going to have to defer into the spring, that he will reserve time on the Senate schedule, which is very hard to get, for later this spring. We had scheduled a markup in the Banking Committee, but the day before we had to pull it off the agenda, not because just of what Coinbase had said about it, but because there was other concern. And you just mentioned one of the big ones, and that is the banks and some of the credit unions have some members of the committee concerned that they will lose deposits.
So tell us about this. I mean, nobody wants to see the fate of, this massive legislation that potentially puts the United States in the #1 position across the world for digital assets because we're worried about bank margins. Give us the crux of the stalemate.
The concern that the banks have is not with the market structure bill. It's with the Genius Act, which we passed last summer. And so the banks are trying to reopen the Genius Act that dealt with stable coins to make sure that digital asset companies, specifically stable coins, not be able to offer something that looks like interest or a payment on a balance, so people don't get confused that they are dealing with a bank-type product. We thought we'd resolve that by calling them bonuses or rewards, but we don't seem to be at a place where we can move this bill forward yet in committee.
Yeah. So I guess, Senator, what I'd like to know is the regulatory framework that you would envision. Because I guess, the banks are pushing back saying, yeah, sure, the crypto platforms want to pay rewards for those holding stablecoins on their platforms, but they don't follow the same rules and regulations that the traditional banks would follow, like, deposit insurance and things like that. So what kind of regulation would you propose for the crypto platforms should they be allowed to pay those rewards?
Well, the provisions in the Genius Act for stablecoins is that they have 100% reserves all the time. And of course, banks get to use fractional reserves. They don't have to have 100% of reserves. And so the stablecoin world is already, I would argue, being treated very differently and required to have 100% reserves, so they don't need insurance. They're already fully backed. And one of the things that's done is create a brand new market for U.S. Treasuries. And we needed that, Maria, because as you know, as the United States continues to accumulate debt, the people who are interested in buying our debt gets thinner and thinner. So it's just been a wonderful asset for placement of U.S. Treasuries, and it's helped buoy up our Treasury markets.
Well, this is a very important point that you just made, Senator, and it's informing us in terms of the backdrop on what you all are talking about. What are the other issues that are holding things up? I mean, if you're going to have to go back into the Genius Act, doesn't that put us back? Because that's already, you know, a closed conversation, is it not?
Exactly, Maria, and it is a setback, but we continue to work on it. We also continue to work on the issues of illicit finance to make sure that we're not leaving openings for those who would use digital assets in an illicit manner. But we're really narrowing the issues. We've been negotiating this since Labor Day, and I've never seen a bill scrutinized like the market structure bill has been scrutinized. It's split in half. Half of it is with the Ag Committee because they have jurisdiction over the Commodity Futures Trading Commission. They've come out of committee with their draft. So now they're waiting on the Banking Committee that's dealing with the SEC side of this to get our side out of it. And it's important we do that because the SEC has some pretty strong financial disclosure provisions that are really good that some digital asset firms need to comply with. So marrying these two parts of the Clarity Act back together and getting it to the floor of the Senate is our next goal, hopefully this spring.
Yeah, and we're going to talk with Paul Atkins, the chairman of the Securities and Exchange Commission, tomorrow about this. But, you know, the Ag Committee oversight of the CFTC is another question that people have because we're wondering if there's too many cooks in the kitchen.
Well, it's easy to assume that. And, of course, there's a small slice of this, of course, that has tax implications. So that's the Finance Committee. And a lot of the Democrats are concerned about what family members of the president are doing, so they want to throw in some ethics stuff, which is also outside of the Banking Committee's jurisdiction. So this bill is getting stretched like a rubber band, and it's going to be a challenge to put it back together.
Senator, what's your vision in terms of the public's use of stablecoin? I know this is very important and, you know, in terms of global transactions, but tell us how things will change, broadly speaking, in financial services with regard to digital assets, Senator.
Well, for consumers, it's going to be faster and cheaper to do business, whether it's across the country or overseas, because money can be transmitted on the blockchain more quickly than it can if you're going through existing bank structures. So it's great for consumers. We want to make sure that not only is it faster and cheaper, but that it's still safe. And that's something we've been working with the Fed about. And we think that we've ensured those safety mechanisms as well. So there are a lot of interested parties in making sure that as we integrate this into the 21st century financial services industry, that it integrates beautifully. And Maria, one of the things I don't understand about the bank's resistance is this gives them an entirely new financial product that they can offer to their customers, whether it's custody of digital assets, which 3 states already allow, or the use of stablecoins as a payment mechanism that's faster and cheaper than a debit card. So it provides new opportunities for consumers. It would open up banks to more opportunities. I'd like to see the banks embrace this rather than resist it.
Yeah, it's a great point. But maybe, they've been so resistant for so long, but now they're faced with serious competition in terms of market share. When you've got crypto platforms like Coinbase doing everything, wanting to expand their portfolio. All right, we're going to watch that. So you think you're going to have a bill, you think this is going to go into what, March, April, May?
I do. We still are working every day, every single day we're in session on trying to resolve some of these last remaining outlying issues.
I so appreciate your leadership on this, Senator. Let me move on to Kevin Warsh, because North Carolina Senator Tom Tillis is holding that threat to block President Trump's nominee for the chairman of the Federal Reserve, Kevin Warsh, unless the investigation into Jay Powell is dropped. Your colleague, Senate Banking Committee Chairman Tim Scott, who oversaw the June hearing at the center of the probe, he joined me here on this program yesterday. And listen to what he said. Watch this.
I was the one asking the questions. Jay Powell was responding to me. Obviously, he and I have very, very strong disagreements on many issues, number one. Number two, I believe that it's time for a new federal chair, and thank God Almighty we're getting ready to get one. Number three, I found him to be inept at doing his job, but ineptness or being incompetent is not a criminal act. I believe what he did was made a gross error in judgment. He was not prepared for that hearing. I do not believe that he committed a crime during the hearing.
So you think at the end of the day, Tom Tillis will vote to confirm Kevin Warsh?
Well, I'm sure Tom Tillis will want to be on your show to say it himself, but my conversations with him, very productive.
Senator, what are your thoughts on this? How arduous is this confirmation process going to be for the chairman of the Fed?
Well, it should be a breeze. My gosh, Kevin Warsh is highly qualified. He's been on the Federal Reserve Board before, coming back this time as a nominee to chair it. Jay Powell's term as chairman ends this spring anyway. And we're going to see a guy who wants to bring the Fed back to its really original purposes, to pull us back to where we're concentrating on, when it comes to monetary policy, on job creation and price stability, and on bank supervision, to get out of the business of making sure that banks are using DEI and not sharing political commentary. That was way out of their jurisdiction.
Yeah, absolutely. And by the way, that's what Jay Powell did, right, on his term.
That's what Jay Powell did.
So that's another issue. All right, Senator, please come back soon. We so appreciate your leadership on all of the above. We'll be watching your work. Thank you. Cynthia Lummis joining us this morning on Capitol Hill. And